Today on Finance at 5, North American stocks are up. Canada and US both have announced more fiscal stimulus, as well as people are struggling to pay for their mortgages. The S&P 500 had a strong day, up 1.4%, making it only a week loss of 1.3%. The Dow Jones was also up 1.1%, making it a week loss of just under 2%. The Nasdaq was up 1.65%, and over the week it was slightly down 18 basis points. In Canada, stocks are also up, with the S&P TSX Composite up 1.15%. It actually had a gain this week of 0.38%. In Europe, stocks were down, with the FTSE falling 1.28%. Over the past 5 days, it's down almost a percent. In Asia, the Nikkei was down 86 basis points. Over the past 5 days, it's fallen 1.8%. Oil slightly up on the day, but over the past 5 days, as you should know, it's had a rough week, with WTI falling 28.7% and Brent crude falling 22.8%. Gold was also slightly down on the day, but has had a pretty good week, up 2.5%. In the Treasury markets, not many big changes today. The Canada 10-year is at 59 basis points, fell about 2 basis points on the day. The US 10-year is at 61 basis points, falling 1 basis point. In the currency markets, the Australia dollar had another strong day, and the euro actually had a strong day coming off those rough past 2 days. On the downside, the Chinese yuan had a rough day, as well as the Canadian dollar. Canada has announced more assistance due to the global pandemic that is crippling the economy around the globe. This is the third time this week that the federal government in Canada has announced more assistance. This is more to address rent assistance for small businesses. The way this program works is it provides forgivable loans to commercial properties for small businesses. It's kind of a interesting style of how it's set up. So the loans will go to the owners, where they can see a cover of 50% of their payments from April to June. But to be able to apply for the forgiveness for that, they will be forgiven if they reduce the rents by at least 75% for those 3 months, which leaves them on hook for 25% of the rent. So while they are providing assistance to them, they're also making it so that they are partially on the hook, as well as the people still there are partly on the hook. So it's not completely covering everything, but still providing, well, 50%, that's a pretty big chunk of the overall amount. The federal government, though, isn't the only ones that are going to take on this additional debt to fund this, as the provinces and territories are planning on sharing their costs. Also, to qualify this, only businesses with revenue decline of 70% or that have temporarily ceased operations and that pay less than $50,000 in rent will be applicable to this. This is as kind of expected that this assistance will come through, as many small businesses in Canada are really struggling to try and pay their rent. As it says here that a survey done by the CFIB found that more than 50% of small businesses will not be able to pay rent without government support. In the hospitality sector, this figure is as high as 75%. Just showing you how dire the situation has come to. But what also worries me is that the government continues to increase their spending of money. The provinces are, and there's even an article come out yesterday suggesting that Canada's AAA debt rating might be not looking too good, and that it could be potentially downgraded to AA, which could have pretty significant effects for the Canadian bond yields and potentially who can buy them, as many investment policy statements and funds and indexes rely on things like credit rating to determine if they're eligible for a certain period, as well as things like banks also have situations like that because more tied to their capital ratios. But hopefully things start to turn around quickly, and just really puts into question how long the shutdown will continue for. But just looking at these dates of April to June, so assuming that includes June, we could potentially see the shutdown continuing until the end of June. The United States has also passed a package with a $484 billion stimulus package moving through Congress as well as Trump signing today in an attempt to rescue small businesses. The primary amount of this package is going towards refueling their paycheck protection program. So 320 billion of that is going towards their already existing paycheck protection program. Basically, it ran out already from their previous $2 trillion package and just a way to refuel that. Also 30 billion in loans for banks and credit unions, as well as 30 billion more for smaller institutions. And in addition to that, 60 billion in loans and grants in a separate type of program, essentially to include other things. This is called the Economic Injury Disaster Loan Program, and it allows more help to go towards farms and ranchers as they are now eligible for that section. Hospitals also could receive 75 billion, um, with a decent amount of that portion going to rural areas. There has been some fight between the different parties there to try and get this thing through, as there has been discussion on where exactly the money should go. A lot of discussion still going around on whether states should receive a bailout, as many states are struggling with their tax revenue and increase in spending due to all the stimulus that has to go out. So it's really an increase in debt from spending as well as less revenue. It just shows you that they're kind of having the same problem as Canada as they keep increasing their total debt load and don't really have a way right now of trying to pay that back. And that even the Senate Majority Leader, McConnell, suggests that maybe these states should just go the bankruptcy route as they weren't doing that well, as they were in situations that were pretty kind of dire beforehand due to having a lot of costs relating to their public employee pension plans. Overall, it seems like most countries are increasing their debt loads, but what really has me worried is whether or not we'll see a scale back afterwards, as many of these programs seem to include things that really don't have anything to do with the global pandemic right now and are inserted other weird, arbitrary things to do with maybe the next election and really just don't quite make sense. It really bothers me the way some people are inserting different politics into things to try and help combat a global pandemic and really just doesn't have anything to do with it. This article showing the effects of the global pandemic on people's ability to pay their mortgage is intense. As it says here, U.S. homeowners seeking delayed mortgage payments top 3.4 million, which is up 17% from a week earlier. So many more people are unable to pay their mortgages. In total, 6.4% of mortgage borrowers have entered into forbearance plans since the recent passing of the legislation by Congress in March that allows people to defer their payments by 180 days. That is a pretty big increase from a week ago, which the rate was at 5.5%. This is done by a report by Black Knight Inc. Just shows you how big the issues are at hand and how detrimental this shutdown has been on people, as many are really struggling to try and pay their mortgages. And really, that's going to play a bigger effect on the overall economy, as banks will take a big hit without people paying their mortgages, as many banks offset their loans to try and basically that's how they make money. And if the money isn't coming in from their mortgages, it could add to detrimental losses and could really lower their capital ratios and the reserves they have. In total, though, 5.6% of the 27.9 million Fannie and Freddie borrowers missed their payments. 8.9% of the 12.1 million borrowers from Ginnie Mae loans also weren't paying. And of the 12.9 million loans without government backing that banks hold on to, 5.7% of those are in forbearance. So that just goes to show you that there is dire effects to this lockdown, and that anyone saying that we can keep going this lockdown and that the costs aren't going to be great as compared to what's going on with the global pandemic. And I will say the global pandemic is dire and it's really sad, and we have to do something about it. But we can only shut down the economy for so long, as the cure for the global pandemic might be more detrimental in the long run and to the future generations than the pandemic itself. As you could see going forward, especially if these rates continue to collapse, is really, really bad quarters for the banks. And in turn, that could result in more, if anything, similar to the 2008 financial crisis, where you saw the housing market collapse and maybe even see banks continuing to need another bailout.